The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's a light week here in the U.S. Got the New Year's starting up, and quite a few countries in the world have the same situation, so it's going to be a little bit light volume, and we're going to go over a couple of things today that are really not immediate trading situations that we normally go over. We're going to go over some historical things that may be of interest. So, and I actually blew a circuit in my office last night, so I'm in a makeshift situation today, so we'll try to get that straightened out by tomorrow, too. I was trying to put a green screen up and a couple of other things, and the electricity couldn't handle it, so this is where we're at right now. Take a look at the S&Ps. Really, there's really nothing but noise around here at this stage, and we talked about drifting higher until the end of the year, and that's basically grinding higher, which is historically and statistically what this thing generally does. Here's a 240-minute view. Again, I really would caution taking any type of major stances on this. I mean, it seems like no news event. Anything could pop out of the sky, but no news events are really impending here until next week, and then we'll have some readjustment of positions, and we'll probably have some volatility in the S&Ps. But here's a 240-minute view, and the situation: 288, 289 up top, and then 281 down below, rounded off. Again, the only thing I would even consider at this stage is it might contract some of the volatilities on some of the options at this stage, but then you've got time decay hitting it at the same time, and it may be a chance to look at doing some kind of volatility play, being buy volatility at this stage instead of selling volatility, but you could look out into the future a little bit for something like that. And that's really the only thing I'm even looking at across the board right now when it comes to the S&Ps. Also, some of the things that are out there now as far as binary options and things like that, there's some opportunities to do some, and I've been looking into this lately on the S&Ps, to do some, longer-term straddles or strangles, owning those things and selling some very short-term daily and weekly options against those type of spreads, and this may be a decent opportunity situation to do those. Just something to put on the radar screen for the future. The dollar, again, this thing and the yen really have been kind of, obviously working together a little bit here. But when we look at the dollar, the best case scenario for this, in my opinion, from a trading standpoint, would be to come back at the beginning of the year and have some new profiles for this particular product to regulate itself, to be able to buy support, as we've looked to buy support above certain inflection points on the dollar all the way up. What's it going to do long term? I don't have a super long-term view on the dollar. I'm just looking at the long-term trend and looking at regulating this trade up with our profiles as this thing edges higher. If we have any breakdowns on the 240s, which is what we've been looking at on this latest move up, and it really hasn't happened, we haven't even had any intraday closes below these 240s, we're more than likely going to also receive a new daily profile, which would, again, give us another reason to sit on the sidelines. And wait for a new support area to provide a high probability area to pick a battle on. On the weeklies, there's probably not going to be a lot to talk about here for a while. So, the long-term trend is up. If you're looking to hold the dollar from a long-term stance, the first technical damage I think on a long-term stance you need to probably be focused on is taking a look at when these daily profiles appear, and if there's an intermediate technical piece of damage that may or may not happen. So that's the situation on the dollar. Let's take a look at. Excuse me, where's that? This is, again, what's been just incredible to me. And we haven't. The reason I pulled it up is because we talked about crossing the border yesterday around 126.06. That was the daily for lows and the 240 for lows. And lo and behold, we've had a new profile appear here. Now on the weeklies, we also had a new profile appear this week, and we talked about this yesterday, edging higher, new fair auctions actually ratcheting up. And from a long-term sense, you've got this 125.15 sitting down here, but now you've got some new inflection points to pay attention to from kind of a noisy ricochet area that are around 125.28 and then around 127 up top. So what do you do with the 10-year right now? And we're going to look at the 30-year because we don't look at the 30-year that often. On the 10-year, I think, considering that the market's grinding higher and may provide some kind of volatility at the beginning of the year, I think you've got to just kind of sit tight and possibly, if you're going to trade the 10-year, maybe get a little lighter on it and just basically put stops in relative to some of these inflection points and just kind of, if the odds are that the market may pull back at the beginning of the year and people may take some profits on what's happened already here, the 10-year could shoot up again, unbelievably so. So, what do you do with this? Again, I think it's a trade a little bit lighter here, or sit tight and wait for breakouts on the 10-year in general on the upside. And if we have some kind of decent pullbacks and the market rallies again, you've got on the intermediate level, you've got 126.06, and then you've also got another battle point around 125.28. But I would kind of look at that as a dig-in area and then to be able to say uncle below there if we're wrong on that. I used to be a big fan of looking at, national debt. We're in the 18 trillion range now. Looking at inflation, as an impending doom type thing on the horizon. But, this stock market 10-year relationship has really made a believer out of me over time. And if you've watched, me talk or Tom talk or me and Tom talk, Tom and I talk together, we've just been talking about, buying support on this 10-year forever. And it's really been kind of the gift that keeps on giving here until we're told differently. We hadn't had a lot of long-term technical damage that's even popped his head up over time at all. Take a look at gold. The situation here is, again, kind of a wait and see. We kind of got back up into that 1199, 1200 range Friday and yesterday. Make sure that's Friday. Yeah, Friday and yesterday we kind of couldn't get through that 1200 area where those inflection points are on the daily, and we're just kind of drifting around down here. And I don't feel comfortable digging in buying gold right now. It would only be, in my opinion, proper to buy it on breakouts above 1200, and I'm not a big fan of shorting this product. So you got 1152 and as a support area of gold right now, and then you got breakouts above 1200, but I'd wait for a close on that. So gold's kind of a no trade, in my opinion, as it stands right now. These are March beans, and again, we looked at the prior month, which now this March contract is the active month, and I want to take a look at beans. And these months sometimes have very serious disconnects, as you guys are aware of. But right now, March beans, I'm looking at 1032 as a fence for this from the long side with stops down below. I know some of the guys out there are trading grains right now. I know that's a pretty serious, a 17 cent a bushel area to kind of have a support vehicle down below. But as we look at this on the daily, then obviously on the weekly, we talked about that, crossing the border on this particular contract, 982, and then we got the confirmation above 1032. So again, I think if you're trading this from a long-term stance, you've got to be kind of willing to maybe kind of reassess things below 1032. I had an email or two about this the other day. That's why I wanted to cover it, and I never got back to it. So again, I know that's a pretty serious range for stops. Excuse me, on this product, but beans are volatile as heck, as you guys know if you've ever traded it. And it's something got to give a little bit of room sometimes. Day trading beans is a very, very difficult endeavor. All right. I got to look at this because we've got some new information happening. Yeah, this is the wrong contract here. Let's see. We'll come back to natural gas. Somebody loaded my page, didn't load the right page. Crude oil, there's not a lot to talk about here. It's kind of the self-fulfilling prophecy we've been talking about for a while. These things on their lows go lower. That 55.11 bottom of the box area was sitting here. We got the close below previous day, kind of a retest, and then drifted lower. And somebody had asked yesterday about the opposite ETF. I fully believe this thing's going to go past 50. And again, there's going to be some noise on the way down. But this 55.11 on this particular month contract, February, is going to be something that we're going to pay attention to orient stops around. And on the long term, you've got this 60.94 that you've just got to say, you know what, oil may drastically go up, but after that, but we've got a major resistance area at 60.94. And by the way, if that starts happening, we'll also get some longer term inflection points on the weekly here. So we're going to come back to natural gas after the break. I'm going to find out why somebody didn't load the right month there for me. We don't take a look at the other softs a lot, the cocos, the coffees, the lumbers, and some of the other coffees, the sugars of the world. We're going to take a look at those when we come back, and we're going to take a look at some of the ETFs, and we're also going to take a look at some of the stocks off the scanner, some of the things that you may be looking to sell after the beginning of the year that have had massive run-ups and are providing possibly some new supply areas up top to be able to kind of leverage against on the sell side. So we'll be back shortly, folks. Hang in there.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And again, if you're seeing me for the first time here on the screen, I blew a fuse in my normal office last night and need an electrician, so I'm in a temporary situation, kind of rigged up here for the camera and the audio here this morning. But again, it's the week of New Year's, and there's some goblins around. So anyway, let's take a look at. Okay, any comments on the background will be greatly appreciated. We're going to take a look at some of the softs here. And we'll take a look at sugar. This is the weekly situation, just ugly, without question. We've got a couple of magenta bars down here on Navigator that's starting to look a little bit overextended, but, you know, the telltale sign, again, just like crude oil, just like the euro, just like the yen going up, until we're told differently, and until we get some technical damage, and we've had a little bit of technical damage on the intermediate every once in a while on sugar, and we don't talk about sugar too often. Again, here's the weekly situation. The most powerful trade that I have really witnessed on sugar lately, and I've got a lot of guys in the commodity arena I talk to all the time. We had a close on November 3rd below our weekly profile. Then we kind of look for that retest trade, which I got, just stopped out on that situation. But again, looking, and that was some daily damage too, and I'll reference the chart if you'd like. But as we kind of got back down below and closed below a new weekly profile, I want you to look at this. This is very, it's a good little history lesson on what's going on. And then I'll go back to that in a second. But it's a nice little history lesson similar to the 10-year going up on the long-term weekly. We have these profiles staging down, new fair auctions kind of, stepping down in a sense. But as we looked at playing that game again, we got the close below a new profile. We got that new profile up here before this week, or this particular week, 11/24. And then we got that retest. So I just want to go over, one close below and then a retest that didn't work, and then a close below and a retest that has worked extremely well. So that retest happened at around 1578 on sugar. Now, similar to the 10-year going up, again, this sugar kind of stepping down with the profiles, things on their lows go lower. We're using that long-term okay to be short, not okay to be long on long-term inflection points. And that 24, let me just point out when that happened. And the reason I'm doing this is not to say, hey, look at what happened in the past. At 11/24, we got the close below. So that was around that area right there. So we started retesting that major weekly inflection point, remembering that weekly takes precedence over daily, over 240s. And that was, again, okay to pick a battle there, in my opinion. Okay to be short, not okay to be long. We met a couple of targets down here, rattled around, had the breakout again. These are dailies. A little bit of technical damage there on the daily. I probably, would have advised if we were talking real time that it may be time to sit tight there and wait for new borders that were crossed on the downside and retest. But, things on their lows go lower, I guess is what I'm trying to say. And using those weekly stage down profiles on sugar in this instance gives us a chance to use lower term time frames to pick battles, i.e. selling below areas of concern here on unfair highs and unfair lows. Again, if you're not in the trade already, staying out of some of these meaty areas of the fair auction. But we haven't had a lot of conflicting information on an intermediate or long-term basis on any other indicators that we look at for sugar. And I took a look at, I think we've got a total of 17 indicators of our own proprietary indicators on Bloomberg. I probably looked at 5 or 6 of them this morning relative to, what was going on with this. And lo and behold, on the daily, we've had the close below. We've kind of had the retest here. And again, I know sugar might seemingly be on sale right now from the long side. But again, until we're told differently in any kind of technical damage, especially on the weekly, I think you've got to continue to sell resistance and sell breakouts on the downside for this particular product. We'll be right back in a couple of minutes, guys.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Again, I literally blew a fuse in my main office last night and had to move temporarily because there's no electricians that work at 2 in the morning. So we'll try to get this straightened out. Okay, so we talked a little bit about finding a couple of stocks here that might be ripe opportunities and doing a little bit of a history lesson here. I looked at Philip Morris, and the reason I looked at Philip Morris is I'm going to show our scanner right here. What I did is I pulled up out of the S&P 500 what was simmering around weekly unfair lows here, bottoms, so to speak. And then I want to look at, obviously, when I have multiple time frames lining up, it's like, VeriSign is just a super ripe situation. I'm going to pull up our landscape view. As you can see, we're just kind of congregating down here in this DMZ, if you will. But, what do we do with that DMZ? And I'm going to pull up my landscape chart here again. I lost it. But it gives me all the inflection points to pay attention to. And as you can see, we're kind of above the weekly unfair lows, below the daily, simmering around the 240s. It's the end of the year. There's not a lot going on. But, again, this is something to pay attention to. Again, Philip Morris I pulled up. We're going to take a look at Viacom also. So what I want to do now is just look at Philip Morris. I want to look at the long-term view. That's the first thing I always do. And as you can see, we've kind of traveled down entirely through the fair auction on the long term, broken down a little bit here, popped our head back up with the latest run-up of the S&Ps. But here's the daily situation. So, what do I do with this and how do I trade it? Considering that the daily range for that fair auction, I'm just going to point this out here. We're looking at 81.72 to 83.42. The weekly, we've got 82.73 sitting here. Keep that in mind, what I just said, giving those inflection points. So, again, the only way that I would consider this a long candidate, and again, let me just go back to the weekly here, provided a little bit of an opportunity here when we first had that kind of bounce back up, poked our head back above that fair auction. But again, what do we do now? The long opportunity, in my opinion, since we're sitting right above those weekly infra lows and we've got that daily infra high sitting here, I'd want to see this now close above 83.42 and use that as something to orient stops around, because you've got a weekly infra low and a daily infra low. If we can get through all that and close above, then I feel like we could move higher with Philip Morris. Now, that being said, from a sheer technical standpoint, not paying attention whatsoever with what's going on in the S&Ps. I want you to look how this stock has acted. Here's the kind of close below and rattle around and not wanting to get back in the fair auction, using this as a fence to move lower. This is obviously not a stock that's really capitalized on the latest S&P rally up. So, taking that into consideration, you've got a weak stock and a relatively weak stock in a strong market is cyclical. So we want to see some confirmations that it's okay to get back in the game on the long side on Philip Morris. But you can find better long candidates out there. This is obviously a little bit dollar related. So if the dollar relaxes, I think you've got an opportunity on this to head a little bit higher, but you need those confirmations, and you've obviously got a place to pick some battles down here, being the weekly infra lows and the daily infra highs there. I want to take a look at VeriSign, VRSN, and let me see if we've opened here today. Nope, we haven't. Okay, so scanner picked it out. We're sitting right there. We obviously had that kind of dipsy-do at the market recently, but again, we're kind of picking our head back up, consolidating around. Here's the inflection points to pay attention to: 57.95 on the daily and 57.59 on the weekly. So you've got kind of a little DMZ there to pay attention to orient stops around based on what the MO is for this particular stock. I don't follow this stock a lot. This is something the scanner just put on the radar screen. Out of 500 stocks, these are 1, 2, 3, 4, 5, 6, 7 stocks it picked out with the criteria I was looking for, on basically using that as the main criteria, weekly bottom of the box. As you can see, our breadth indicators are still very positive, so it's going to be a little harrowing experience here to short stocks in general, especially being at the end of the year. So again, you've got also on the 240s, you've got an inflection point here to pay attention to that's right in the wheelhouse of those other three. And as I look at this, I see pretty plainly that I'm at the bottom of our profiles on all three of these time frames, and that's exactly what we looked at on our landscape view. So the cool thing is, if you're going to try to pick along here on VeriSign, you can put your stops oriented below this entire DMZ here, or I call them demilitarized zones. It's kind of a no man's land. You want to break above or break below those things. Use some of the other momentum indicators that you may be already using, and be able to assess or identify whether that's a decent long candidate or short candidate. What am I looking at? What am I looking at this stock as a candidate for me? Put a gun to my head. I'd lay out the shorts for everything until after the first of the year. So if you're going to basically try to find some stocks that are better long candidates, I think you can. But I think you've got maximum confluence of inflection points here, and you can orient stops on the long side here, and you could take a shot with this in general. So that's the take on that. Let's take a look also at Viacom B. VIAB. That was on the weekly scanner situation. Now, this is something that's really gotten some legs in the past couple of months to move up. But again, you've got some problems here that you've encountered before that actually provided some decent trading opportunities. Weekly unfair lows here, 77.15, came off there again. Now we're kind of crowding back up into that. And on the dailies, you've kind of crossed some borders and you've got a new profile that's appeared below here. So looking at this particular stock and looking at the action in general and looking at where our navigator is here on our weekly and our daily, I would consider this not a bad long candidate considering what we said about the end of the year situation and the situation that we've kind of came off of here quite a bit, actually, about, what is that, about 7%. And now we're crowding back in here, and we've got a new daily profile that's appeared, and we're also sitting right above there. So on Viacom B, I would consider this a decent long opportunity. But the good news is you can orient stops. A decent long opportunity if we can get above the DMZ at 77.15, and you can orient stops around those two inflection points that are provided here by that 76 and 77.15 DMZ that we're kind of sitting in right now. So getting above there would be a decent long opportunity, in my opinion, with stops oriented down south of there. Okay, I'm sorry. Just had a brain. Okay, MDLZ. Mondelez International, MDLZ. Okay. I have no idea what this company does, and I really don't care. Here's the unfair lows. This is purely technically identifying some opportunities here. Doing some fundamental research is up to you. 37.14 unfair lows on our weekly, and then we've got sitting here the ability that this thing may move higher based on we've kind of closed above, come back and retest it, and that's similar to that weekly situation that we've just gotten away from. So of the three stocks that we've looked at, and that's kind of what I do in general, is assess some opportunities, try to figure out what's the ripest opportunity. This MDLZ may be one of the ripest opportunities that we've looked at of the three stocks. Now, considering that, we looked at some other stocks the other day, namely one of them being IBM, and what I wanted to do was to show you that, this weekly unfair low that we migrated back up into, you hope that you come back and retest those situations that we broke down before. New weekly profile sitting here, 162.49. We got there the other day. We were talking about this. The scanner identified it, and now we've kind of drifted away from that. This is kind of a different animal in general, and your targets initially on this, 158.20, and in my opinion, a lot lower, probably revisiting 150.178. So, again, that weekly kind of trailed down, provided a decent high probability setup. The scanner identified that, and I'm going to pull this up here and just look at IBM. Pull that up, let it populate. There we are. And we're sitting here with our landscape view, and all those inflection points are basically provided right here. And we've got a new daily box that may be appearing soon, but that's yet to be seen, showing that yellow grid there. So I'm going to go in here, and I'm going to clear everything out. Hopefully that'll clear everything out. Let me get rid of my sorting. Okay, so we're back to the S&P 500. So what we're going to do here now is I'm going to look at weekly tops. I looked at weekly bottoms before, and as you can see, the market's obviously drifted a lot higher. There's a lot of stocks sitting at weekly unfair highs. Prudential Financial's got obviously a daily and a weekly unfair high sitting there. I don't see any. Let's see here. Looking at Cablevision, Gilead. Let's take a look at Gilead. This thing's been obviously the news lately. Okay, so Gilead, we obviously had the news come out on this. A lot of pharmaceuticals got hammered. We're back into weekly unfair highs here, and those weekly unfair highs 97.40, and then we also, by the scanner, and a new box appeared yesterday at the beginning of the day. We got back up into this 97.72. So 97.72 daily unfair highs, weekly unfair highs 97. Let me just make sure we get that right. 97.40. So you got a very tight little DMZ there here. I think it's providing a decent trading opportunity, even though the market's, again, probably going to drift higher towards the end of the year, but who knows. You got some inflection points to pay attention to here, and Gilead may be doing that. Okay, we've got the bad news. We come back and retraced upward back into some of those areas that we fell off from, which is actually relatively bullish, but we've got a decent trading opportunity, at least on the short term, around that 97.70 general area based on what we just talked about. And you've got some targets down below 90.66 initially on the daily. We've got to see how this opens. But, again, all bets are off above 97.72 up in that area based on your appetite for risk for Gilead. Want to take a look also at something else we were just picking around here with. Let's see here. There's a lot of opportunities on here, but I'm picking out the ones that are having multiple time frame confluence inflection points here. Cablevision, CVC. Take a look at that. CVC. Okay. 27.70 sitting here, and then 2070 sitting there, and 2096. So, and as you can see how this thing's acted in the fair auction, we come down and leverage off 1952. Hold on, that whole technical glitch there. 1952. I'm sorry. 2096 and 2070. So we're sitting in a DMZ right now on Cablevision, and what do you do with this now? You've had a decent retracement up. I'm not a big fan of shorting stocks right now towards the end of the year in general, but you've got a situation where we've had this particular stock retrace back up from the entire bottom of the fair auction. We've met the top. This may be a situation where we could relax back into the fair auction, but the good news, again, is you can orient stops above that. And hopefully at the end of the year, this particular stock not making new all-time highs like the market has recently may provide a little bit of an opportunity on the short side. But, again, regulating stops above that DMZ is always a good idea. When we come back, we're going to take a look at a couple other things off the scanner that have to do with some short-term plays, very short-term plays, actually. And we'll be right back in a couple minutes, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, guys. Welcome back to the show. Just wanted to pull up natural gas finally here. Here we go. Let's just take a look at the long term on the February contract. Again, this has just been ugly really quick. Whew. So again, the kind of the breakdown, the close below the retest. Again, that close below the retest didn't work before back in late October, and that's okay. That's trading, and that's what stops are for. And this thing is, you got to have stops in on natural gas, especially. Oof, can be painful, as you guys know. Close below retest. This one actually worked very well, and we've gotten a big downdraft, almost a 25% reduction in natural gas price. But what do we do now? So we got in that $3 range. We poked our head down below, but the cool thing is right now, 3089 unfair lows we got yesterday on natural gas. Today on natural gas. We got the new box appearing here. So you've got a leverage point here at 3.089 on the Feb contract to put stops already in below. And it looks like kind of wishful thinking right now. Target's above only at 3.333. So that's the situation on natural gas. And for guys who are long, I hate to say that's your possible maximum upside right now, but this thing could rattle around in the fair auction and go even lower. Don't think it can't. It's a possibility, and you can't discount it. But again, we're getting to the point on natural gas, I think, where you can start taking some shots on the long side, and that's kind of the way I'm looking at it right now. FedEx, talked about this the other day. FDX, here we go. Now, don't talk about PSCs a lot in very wide profiles. This is our long-term. PSCs do have a decent relevance here. FedEx had the news, came out, and seemingly nobody really cares. We rallied back and got back into fair auction. Now we're sitting here with the PSC on the weekly and the unfair lows at 175.07. That's seemingly okay to me to try to pick a long side for this thing to shoot for higher prices. Even so now. So stops oriented below the PSC on the weekly and the unfair lows on the daily, 175.07. And I'm going to pull this up. These are presented to you. I just picked it out. I wanted to see what was hanging around daily unfair lows. There's that PSC 174.66 on the weekly, and there's the 176.71 on the daily. So we're kind of sitting right above that area. We're sitting on top of that DMZ. And this may be a decent opportunity to take a shot on the long side at this stage. We'll take one more look at something that I've been following. Wheat. More than likely going to have a new profile appear on wheat towards the end of the week here. That's great. And we're looking forward to that. So right now, based on being in the middle of a fair auction on the daily, hopefully getting a new inflection point set happen on the weekly, 583. We talked about doing nothing on wheat right now. I'm looking forward to getting some new information on the weekly, and then also if we can get a retracement back into 583, that'll be a chance to pick a decent battle on wheat. I had a lot of emails about this because obviously this has been relatively volatile lately, and some guys are trading it. We'll be picking it back up again tomorrow. Short show, and Steve Rhodes is next, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.